Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. This recent market has given investors an opportunity to buy a number of companies that are generating a ton of cash, and it looks like they will generate a lot of cash for the foreseeable future. So I wanted to look at 3 companies that look extremely cheap today and why I think these are really cash kings and could be in a really great position as we go through a very turbulent economy and market over the next year or two. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content and turn on notifications so you know when a new video comes out. First company I want to look at is General Motors. And this is a company that a lot of investors don't really like right now because they want the new shiny thing like electric vehicle makers. But General Motors is really in a much better position than you might think. You can see here that its cash from operations per share is over $3 and the stock is only trading at about $35. Price to earnings multiple right now is under 6. Dividend yield is over 1%. And I think when we think about this company, investors just don't need to overthink it. People are still buying trucks. They're still buying SUVs. Those are not going electric at nearly the pace that some of the smaller vehicles are. They're still undersupplied in the market as well. And internal combustion engine vehicles they're not going anywhere, especially those big ones. We're going to see some of the smaller vehicles that you can get a 300 or 400 mile range vehicle for $30,000 or $40,000. That's going to move to electric first before something like a Yukon or a Suburban, which is hauling 6 or 7 people around. Even Rivian isn't selling that vehicle for under $70,000 or $80,000. So I think that core business is much better positioned than a lot of people think. And GM is investing heavily in electric vehicles as well. It says they're going to make about 100,000 electric vehicles in the second half of 2023. So within a couple of years, they're going to be one of the leading electric vehicle makers in the world. We're getting a company that's generating a ton of cash, investing a lot in the future in not only electric vehicle production, but also companies like Cruise and autonomous driving. I think strategically and from a value perspective, this is a very well-positioned company. Investors should really like what they're getting in General Motors. And don't forget that a company that's generating cash at a time like this is going to be able to scoop up some cheap assets when they come for sale. So if any of these electric vehicle manufacturers that have gone public or raised money in the last few years start to stumble, GM may actually scoop them up and get a good deal. The second one I want to highlight is Dropbox. This is one of these technology companies that I think has had a really valuable niche, but investors have seen a little bit of stumbling. Maybe the company isn't growing as much as you hope. Maybe the margins are compressing a little bit, but this is still a great stock. You can see here that we have tremendous cash from operations. Dropbox has actually been buying back stock at a really rapid rate. The price to earnings multiple is only 11. And let's just be honest here, the company is still growing. It may not be growing at the rate that a lot of people wanted, but this is a very sticky business. Once you start paying for a subscription for Dropbox, it's really hard to drop it. So that's something that I think is going to continue over the next few years, especially as small and medium-sized businesses start to rationalize where they're spending their money. I don't think Dropbox is something that you drop completely. This is the kind of company that all your files are stored there. Maybe they're able to add revenue sources like artificial intelligence, some of the search tools that we're starting to see emerge in some of the other AI ecosystems. I just think this is such a good value for investors right now, and it's generating a ton of cash, just like General Motors may be able to acquire some of those competitors with that cash if they start to stumble. So I really like Dropbox right now. And the final stock I want to look at is Boyd Gaming. Market cap of $6.4 billion, free cash flow of over $700 million right now. The US gaming business in particular has just become a cash machine for a lot of these companies. And remember that the casino business is about building a resort and casino. That's where a lot of your expenses goes, is upfront. And then over a long period of time, you're able to cash flow that. So every marginal dollar that comes in is very high margin. What we have seen coming out of the pandemic is people are looking for more entertainment and gambling more than ever. That's something that has really helped companies like Boyd Gaming. That's why the company has such great cash flow right now. The thing is, I don't think that's going to stop anytime soon. People are still looking for that entertainment and for gambling. And from a supply perspective, there's just simply not a lot of supply coming onto the market. Not only was there not a lot of new casinos approved and started construction during that pandemic period, but there's not a lot of areas that are adding gambling. And so the existing areas and the existing casinos are just sort of have a lock on supply. I think that's a great position for any business to be in and will really help Boyd Gaming. So maybe not the most exciting business, maybe not a great growth business, but just a great cash flow business. And I think that's okay for a market like this. Owning a business that's just going to cash flow 10 to 15% of its market cap in free cash flow, that is a great position to be in. They could pay that back to shareholders through a dividend. They could buy back stock. A lot of great options for companies like Boyd Gaming. So as we go through this turbulent time in the market, as interest rates rise, if you're looking for companies that both have cash on the balance sheet and are generating a lot of cash in their business, don't forget about General Motors, Dropbox, and Boyd Gaming. I think these could be some really great companies to own for the next few years, a lot of margin of safety there, and could be aggressive on the acquisition front if the opportunity arises over the next few years. So keep an eye out for those companies. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody, and I'll see you here next time.